Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate mud so you don't have to. Today we're diving into MOVEIX INC's latest annual report. Now, MOVEIX might not ring a bell, and after this report you'll see why it probably shouldn't. Let's just say their financial journey is more of a stumble than a smooth ride. Think of them as a cautionary tale of how not to run a public company without actually having any real business going on. Let's kick things off with what MOVEIX is supposed to be. According to the report, this company was set up way back in 2016 to import electric scooters, those hoverboard things from China, and sell them in Europe and North America. They also had plans to resell electric bikes and segways. Ambitious, right? Well, those dreams hit a wall pretty quickly. The company went dormant, meaning inactive, from 2019 to 20 video check bikes and segways. Ambitious, right? Well, those dreams hit a wall pretty quickly. The company went dormant, meaning inactive, from 2019 to 2020. It wasn't until a court-appointed custodian stepped in that they did anything at all. Then things got even more interesting. In 2021, there was a major change in control. Cardone Ventures LLC bought a huge chunk of the company's stock, making them the controlling shareholder. Brendan Dawson took over as the new CEO. So what's Dawson's background? Well, he founded a company called Sonos Corporation, took it public, and then founded Audi Group, which was later acquired. He's also involved in Cardone Ventures. At least this guy seems to know his way around businesses. But the results haven't been so great yet. Now, let's talk about the company's plan or lack thereof. Right now, MOVEIX doesn't have any real operations. They're basically just trying to find a business to buy or merge with. They're open to pretty much anything, which honestly isn't very reassuring. They admit that they might go for a company that's financially unstable or just starting out, which adds a whole lot of risk. Now, let's dive into those juicy financials. We have the balance sheets, income statements, statements of cash flows, and more. Don't worry, we'll keep it high level and try not to put you to sleep. Looking at the balance sheet, as of the end of last year, the total assets were just over $800. Compare that to the total liabilities of over $180,000. And we see that they owe way more than they own. That's not a good look. Their stockholders' equity or deficit is negative 180 then debt. Flipping over to the statement of operations or income statement, they didn't make any money. Zero revenue. Meanwhile, they spent almost $72,000 on administrative expenses, mostly to a related party, meaning someone connected to the company. So, they're burning cash and not bringing any in. The statement of cash flows tells us how much cash is coming in and out of the company. They used $63,000 in operating activities, meaning in the end they didn't make money from their business. However, they also got $63,000 from financing, which in this case is basically just loans from related parties. All of this leads to something called a going concern warning from the auditors. This means the auditors, the people who check the company's books, are seriously worried about whether MOVEIX can stay in business. They point out the huge accumulated deficit, which is basically all the losses they've piled up over time. Of course, a report like this wouldn't be complete without a hefty list of risks, and MOVEIX has plenty. One of the biggest is that they don't really do anything, so there's no way to know what the future will hold. Another risk is that they might struggle to find a business to combine with. The CEO spends his time on other business to combine with. The CEO spends his time on other businesses. They say that the COVID-19 pandemic could hurt their plans, but honestly, it's hard to see how it could make things much worse, considering they don't have any actual business. And speaking of key people, the whole operation seems to depend on Brendan Dawson, the CEO. If something happens to him, the company could be in even more trouble. They even admit there could be conflicts of interest since he's involved in other businesses too. Let's touch on who's in charge. Right now, Brendan Dawson is basically running the whole show as the only director, CEO, treasurer, and secretary. That's a lot of hats for one person. One last number of note is the fees they paid to their accountants, $41,000 last year. It's kind of funny that they paid so much money for an audit on a company that doesn't do anything. Finally, they say that nothing important has happened since the end of the year, which, given everything else, is hardly surprising. So let's sum things up. MOVEIX is a company with a history of not doing much. They're now trying to find a business to buy, but they don't have a clear plan, and their finances are a mess. They're basically a shell company hoping to find someone to rescue them. Honestly, MOVEIX is a mess, and their biggest strength might be their weakness, which is they don't have an actual business that can go wrong. However, they have a lot of debt and have not been profitable for many years. They need a major restructuring to work. However, the path is very difficult to see. MOVEIX is a high-risk investment for anyone. Okay, that's all for today's Corporate Decoder. Hit that like button if you enjoy it, and don't forget to subscribe for more deep dives into the world of corporate filings. Let me know in the comments what company you want me to decode next.